In this discussion, we will discuss the discussion question of discuss variable cost, fixed cost, and mixed cost. These are going to be some of the major components of the CVP cost volume profit analysis. That's probably where we want to start. These are managerial accounting concepts as opposed to financial accounting concepts. These are cost volume profit or CVP type of analysis concepts. These are concepts we don't typically see in the normal financial statements, but those we might see in a CVP or contribution margin type of income statement. So it's often common to contrast the variable cost and fixed costs and then go into the mixed costs. Normally, I would think of variable costs and fixed costs as the total, how they act in total, meaning the total variable cost. So total variable cost, if we consider the total variable cost, will typically increase or vary as we have an increase in production level. It will typically decrease as we have a decrease in production level. That's probably where we want to start. The fixed costs, on the other hand, given by the name, will typically remain the same in total as we increase production levels. As we decrease production levels, it will also remain the same or be fixed. And then naturally, we might not have as good an idea of the mixed costs, but of course, they're going to be somewhere in the middle. They're going to be costs that have some components of variable, some components of fixed. Now, if you're in an essay type question, that's basically where you want to start. But if you have an essay question, you can expand from there. Or if you're in a discussion question, you're looking for things to put into a discussion type question on this, there's much more. There's a huge amount of variance or expansion that you can put on that and see if you can pick up some more points. For example, the variable costs and fixed costs, you can talk about how they change per unit. In other words, the variable costs actually remain the same per unit. In other words, they're going to increase by a fixed amount. So as we increase, the per unit variable cost will be the same as we go up, which is a little bit more confusing of an issue. And the fixed costs, if we were to say fixed cost per unit, not a calculation we're going to use all the time in CVP analysis, but if we were to say a fixed cost per unit and average out what the fixed cost would be on a per unit basis, then it would actually decrease, of course, as the units go up because the total fixed costs are the same. And if we make more units and we divide out the fixed cost per unit, then it would actually decrease. And then the mixed costs are going to be something, a component of the two of them. So we could go into some detail in terms of what the mixed costs could be, how the mixed costs could look. In terms of having the relationship of having some fixed component or some variable component to it. In other words, we might have a type of fixed cost, mixed cost that is going to be fixed for a certain range, and then it jumps up kind of like a step pattern, and it goes up in some kind of step pattern like that. Or we could have some kind of curvilinear fixed cost, mixed costs, which doesn't go up, it goes up, but not in a straight line, and it has some kind of variation from the standard variable cost, which would be a linear relationship, more of a fixed type component possibly that would be causing that curvilinear type of increase relationship. We also might want to discuss the fact that the mixed costs are things that we don't like in the CVP analysis. What are we going to do with the mixed costs? We're going to have to find some way to break them out between the variable costs and the fixed costs. We're going to use some type of method to break them out. And one of the most common methods that we'll be talking about is a high-low type of averaging type of method. So you can actually go into the mixed costs, go into the high-low method. Another common thing that you might want to put in an essay question or in a discussion question is some examples of what a variable cost and a fixed cost might be. So the most common variable cost, the one that kind of go-to variable costs, would be the direct materials, because direct materials are going to go up in a constant fashion typically as we increase production. And the go-to fixed cost will typically be something like the rent. The rent will typically be the same as things change. There's a whole lot of other kind of examples you can give of the two, but those are going to be kind of your go-to areas. If you need just a hard variable cost, that is what it is, and you need just a fixed cost, then you have the rent there. A mixed cost, you can give different examples of things that could be mixed. You might think of a salary as being mixed in kind of a step pattern, in that it's going to be fixed to a certain degree, and then a salary manager salary or something could go up if they reach some level of performance, possibly, and it goes up. And then, or you could think of a curvilinear one or something that behaves a little differently, such as utilities maybe might have a fixed component up to a certain level. And then, so even if you had no production, you'd have to pay that minimum amount and therefore would be fixed up to that level possibly. And then maybe it would go up as we increase production from that point, and therefore have some kind of mixed and fixed component to it. So those are some of the things we can describe on it. You can expand a lot on this kind of question. You want to, when you go to the essay questions or discussion questions, of course, expand as much as possible on it to make sure that you pick up as much points as you can.